What's going on, dividend investors? I'm really happy to announce that it took me 2.5 years of diligently investing in great dividend companies, and I finally have reached a major milestone that I've been gunning for quite some time here. I finally reached over $100 a month in dividend, true passive income. While $100 is pretty good money, it's not exactly enough to pay for all my monthly expenses just yet, but it is a very good start. This March, June, September, December tranche is by far my biggest dividend month, and I'm going to be comparing that to how I did in 2019 as well as 2018 to give you guys the idea of the true power of dividend growth investing for comparison. But first, we're actually going to go over this semiconductor company, Intel, because it had quite the disappointing week. It's not every day a $200 billion plus market cap company drops by over 16% in just one day. That is truly insane. So I own 10 shares of Intel. What's actually kind of funny is that I actually bought 4 shares more of them prior to them releasing their earnings. So obviously now that looks like quite the foolish mistake. But honestly, buying shares of companies and then having them go down like the very next day has been quite the story of my life. What's crazy about this is that Intel didn't even post that bad of earnings. Their numbers actually beat a lot of expectations. The reason for their plummeting had to do more with the announcement that this company was delaying its transition toward using 7nm chips. The delay pushed back their product portfolio to late 2022 or even 2023. Intel might also now have to use more third parties for manufacturing rather than doing the production in-house. Some of their competitors, AMD and Taiwan Semiconductor, were up big, both double-digit % increases. AMD already made its debut of its 7nm processes with its Ryzen processor, taking away potential market share from Intel that they were already projected to lose. Now, some investors have made hyperbole comments like, Intel is basically unownable now, but I'm not quite sure about it. I don't see it like that. Let's remember that Intel did post great earnings this quarter, up 20% year over year with their revenues, and their free cash flow numbers are going up. Their products are only going to continue to be in high demand. They also do great work with data centers, cloud businesses, 5G network. That demand is really increasing. Intel also raised their outlook during their last earnings call. While many businesses right now are struggling during this pandemic, a company would not raise its outlook if it felt like they were going to struggle for the rest of the year. This company balance sheet is also just amazing. It has a current ratio of nearly 2.0 when most people consider anything above 1.0 solid. This company also nearly had $17 billion in free cash flow last year. If a company is making that much money and is considered unownable, please tell me more companies that make more than that and pay $6 billion in dividends to their shareholders. I will gladly go out and own that stock. Intel right now trading with about a 2.6% dividend yield. Nothing too flashy there. They have a very low payout ratio, which is good because we want technology companies like Intel to be focusing more of those profits to reinvest in itself. The present and future is all going to be computer. Intel has plenty of products now and in the coming next 5 years to meet that demand. AMD, while it's a great company, don't get me wrong, let me remind you that it makes a fraction of the revenue Intel does. Its free cash flow number is just $275 million, and it's actually only been profitable 2 of the past 5 years in free cash flow. Again, this is why I love blue chip companies like Intel. They may pay a small dividend and they don't exactly have the greatest history of raising that dividend every year. They are not a dividend aristocrat or anything, but they have paid consecutive dividends for about 2 decades now, and they're going to be huge players in cloud technology, artificial intelligence, 5G, autonomous software, gaming, which is it's just crazy how big of an industry gaming is these days, data centers, and I will probably buy more shares with this latest dip here. So you can even see just in this last month, it's down 13%, last 3 months down almost 15%. Though I do really like Intel, my favorite semiconductor companies are more like Nvidia and the chip materials maker Applied Materials. But that doesn't mean I'm not going to nibble on more shares of Intel here. I only have 10 shares right now, and it makes up less than 2% of my portfolio. So I can certainly afford to maybe take more of that risk that people are saying and invest in Intel, and it wouldn't even make up a very large percentage of my overall portfolio. So I'd love to hear what you guys have to say about Intel. Are you guys buying on this big dip right here? Or are you guys staying away from this so-called unownable stock? Let me know in the comments as you guys hit that like button, because we're about to get into the reason why you click this video is for those juicy dividends. Okay, here's our dividend page, and don't forget to subscribe to this channel as well, guys, because I do put out these videos every month going over all the dividends I received in my portfolio. And of course, the very first dividend we received in the month of June would happen to be the stock we just talked about, and that is Intel. So they actually have an upcoming ex-dividend date here in the first week of August. So maybe I'll try to buy more shares so I can get in on that next dividend. If not, it's not a big deal. I could always just wait till after their ex-dividend date, probably get the stock for even lower price. So right now at the time, I only own 6 shares, and they pay out 33 cents a share for a total of $1.98. And then the next stock is V for Visa and for Victory, because this stock is amazing. I own 7 shares, only pays out 30 cents per share. But again, all the big capital appreciation that I've had with Visa, it makes it more than worthwhile to own with its low dividend yield. And it's actually just gonna go probably more and more up as we transition more into digital payments. And then the next stock we have, this is actually the first time that Honeywell has paid me a dividend in the time period that I owned it. And then I also reinvested the dividend that I received from it and bought about 0.02 of another share of Honeywell. Stock prices went down a little bit since the time that I reinvested this at 161. Right now it's trading at 149, and I also added in another share. So I now own 6 shares, and glad to be owning Honeywell in my arsenal here. Great industrial company. If you're looking for maybe an alternative to 3M, think Honeywell is definitely not a bad choice. Now, Pfizer also been on the news lately with all their positive talk about any sort of C-19 vaccine. So we can see here that the stock actually rose quite a little bit here in the last month. It's up 16%. So hopefully they have more good news to announce, but right now I just own 11 shares. They pay out 38 cents per share for a total of $4.18. So the next dividend stock is Southern Company, which pays me for 8 shares that I owned for 64 cents a share, and that gives me a total of $5.12. Not too bad. Southern, a very classic, boring utility company, but in this situation, I don't mind, right? Utilities are a very important part of living. We're probably always going to be paying our utility bill every month. Southern is going to hopefully continue to pay me dividends as well. And then this one is a dividend king, and J&J, Johnson & Johnson, only own 4 shares. I've always been trying to add more to this particular company, but it doesn't always seem to be on a great discount. Though I would say with its relatively low PE ratio here, 26, 25, compared to a lot of other companies right now, that's not too bad. So Johnson & Johnson, $1.01 for the 4 shares I own, $4.04 total. And then we go to Otter Tails. This is just one of a energy company that I bought when I first started investing. Never really bought more, but right now I just hold on to it more for sentimental reasons. And it's just dripping itself and repurchasing itself. All right, next up we have ExxonMobil at $6.09 for the 7 shares I own. Pays out 87 cents a share. Now this is one that they haven't actually raised their dividend yet for this year. They are a dividend aristocrat, but obviously we know the oil industry is facing some huge hurdles with people not having as much high demand for their products, since we are kind of confined more to our homes and not traveling as much. So ExxonMobil down pretty big on this position, but makes up less than 1% of my portfolio. And I do have confidence that we will always have a demand for oil and that it will eventually go back up soon again. The next company we have is Microsoft at 9 shares of them at the time. Now I own closer to 11 shares, and I've just had amazing capital returns with Microsoft, and they pay out 51 cents per share for a total of $4.59. Microsoft, a dividend challenger, not yet a dividend aristocrat, but I have no doubt that they will be on their way once they continue to pay out dividends here now for the next decade. Applied Materials, very low yielding company at only 22 cents per share. I owned 18 shares of them. And then you can see here, I've had pretty good capital returns on them, so not too disappointed in that respect there. Moving on to 3M, ticker symbol MMM. So 7 shares at the time, and that gives me $1.47 per share for a total of $10.29. It's nice to see these dividends into the double-digit range now. So I've owned 3M for quite some time, and I'm glad that I have been making some money off of 3M, at least in dividends, because my total return on them is still negative. Then we have Realty Income buying more of itself here. I owned 7 shares at the time, pays out 23.3 cents a share for $1.64, which then for about 0.02 shares more of O. And that's really nice because Realty Income pays out monthly dividends. Every month it has a chance to continue to compound and repurchase shares of itself, and that will hopefully only continue to increase my monthly dividends from them. And then we have another blue chip company in the fast food giant McDonald's. Owned 5 shares at the time for a total of $1.25 per share and $6.25 total from them. That's about like if you go to McDonald's and buy like a Big Mac, maybe a Big Mac and like a small fries you can get for under $6.25 depending on where you live. So I've actually bought 1 more share of them since then. I was able to crack $1,000 in equity. And it looks like McDonald's is going back up into the $200 range. So it's nice to see, up 8% in the last month. Then when we get into my railroad stocks here, CSX pays 26 cents a share for 78 cents total. And then we also have Duke here at $9.45. They actually increased their dividend just a little bit the other month here. So now I get paid 94.5 cents per share. Owned 10 shares at the time, and that continued to reinvest into itself. So it's great to see the portfolio at this point now just growing on its own. But as this continues to grow and get bigger and bigger, it's going to be more and more significant. So Equinix, one of my favorite companies here, I own 2 shares and they pay out $2.66 per share for a total of $5.32. But I've also had just an amazing return on this company as well, 45% in capital appreciation. Prudential, another stock that I actually just recently bought more of, $1.10 per share, total of $6.60. And then that reinvested to 0.10 of a share of Prudential. And then I just went ahead and bought another 3 shares recently. So all right, moving on here, we have Waste Management at $4.36 total for the 8 shares of them that I own. Shell, unfortunately, this company cut its dividend. It was actually the first time since World War II that they had to cut their dividend. And of course, that had to be right when I owned it. Those are not the statistics that you want to be part of, but I'm just glad that they're still paying a dividend here at this point, 32 cents. It was a really significant dividend cut. Before it was about 94 cents per share, and to see it get cut down all the way to 32 cents, that really hurts. But I guess at this point, I'm just going to be holding on to them here. So once we continue to move on here, NVIDIA pays a very small dividend, but this is another semiconductor company that has a lot of potential for the future. And I will just continue to hold on to them. And if they pay out a dividend, that's cool as well. Bank of America owned 34 shares, 18 cents for a total of $6.12. Bank of America, great bank in my opinion. I know some people have had some issues with it, but I own their credit card, have never had any issues with them. Then we have Union Pacific here for 5 shares, 97 cents per share, $4.85. Hopefully they announce a nice big dividend increase here in the coming weeks. Then we have Pepsi at 6 shares, $1.02 per share. Another very blue chip company here in Pepsi, very safe investment, $6.14 from them. So it's really nice to see these companies just continue to pay me more and more in dividends. And I know a lot of these are very blue chip and reliable. And then we got the ETFs here. Some of these were actually, they might be listed that they were paid in July, but really they're part of the June tranche here. SPHD here at 6 shares only paid me 92 cents in total for this month. But then QYLD, at the time I only owned 17 shares. They pay out a ridiculous almost 21 cents per share And then I actually now own 51 shares of them, so they should be popping up here for their ex-dividend date and pending dividend for me, since they are a monthly paying dividend stock. And wow, these QYLD dividends are just going to be very big coming in these upcoming videos. I can't wait to show you guys how much I make from this ETF. And then UNH just made a video about this great company, one of the more underrated companies. It's crazy to think that a company that has a $300 billion market cap could be kind of fly under the radar, but very happy with this stock. I actually think it's one of the more elite top tier dividend growth investing companies. Very low dividend yield, but again, when you have this crazy capital appreciation that it's had these last 5 years and consistently been raising its dividend, UNH raised it almost 16% this last quarter, which is just phenomenal. So that's gonna do it for the June dividends. So I made $111.73 in total dividend money for the month of June. A total of 26 different companies paid me, and I think we're getting to that point where I might be getting close to getting paid more in dividends than I do going to the bathroom at work, but it's still pretty close. It's close at this point. So that $111.73 is actually a 227% increase from June 2019, when I only made $34.21. And then in June of 2018, it's crazy how fast this compounding and this dividend growth journey has gotten, and it's going, because in June 2018, I only made $9.55. And if you think about it, that 3M payment of over $10, that's more than I made in an entire month just 2 years ago. So that's just great progress. And just knowing in the future that this is going to be a regular thing, is getting paid triple digits. It's like having a second job, almost like a part-time, very passive investment here. Hopefully I can get the other 2 months of the quarter to get over $100 as well. But at the same time, I'm just going to let that naturally happen. There's really no need for me to push and buy companies that pay in certain months, just because I'm not in any sort of rush here, still relatively young and pretty far away from when I plan to retire. So I definitely have time on my side. And in case anyone was wondering, in Q2 of 19, I got paid $187 in passive dividend income compared to just $57 in 2019. So the next time that this tranche will be hitting again is in September. So I already know that month is going to be bigger because I've already been adding more shares, and I've also been reinvesting a lot of shares from these companies. So I'm really excited to show you guys that once it becomes September, and it's going to be even more than $111. Really, it's just nice if you think about how hard you have to work going into your 9 to 5. Having this passive income is just really nice, and having companies give you pay increases for basically doing nothing but owning them is also just amazing as well. So if we can somehow get a raise at work for doing nothing, that would just be great. But I suppose till then we can just keep dreaming about those dividends and having those continue to climb and get us closer to our FIRE. And guys, these videos take a lot of time for me to make and the effort to put together. So the best way that you guys can support the channel for me is to tap that like button and subscribe if you like these videos. Let me know what you're thinking in the comments, and let me know how your dividend growth investing journey is going as well. And I'll catch you guys next time.